Perfect. Okay. Good morning. This is the Help to Buy Alpha assessment. If any of you have joined the link and you're not meant to be in this assessment, please speak now. We will be starting with the team show and tell and demo of the service. A quick round of introductions first to understand who is who. And then we'll move on into user research and design. We'll have a break, and then we'll cover team technology, and then we'll do a final round of questions, wrap things up. And then that's the end of the session. Just a formality for me to remind everyone that there's a code of conduct for the assessment. We want to get the best out of the team and the best out of the panel. And seeing the big picture, we want to deliver the best product to the citizens. So just a reminder, and without further ado, on to Dan, who's our lead assessor, for introductions.
Okay, thank you. Good morning, everybody, and welcome to today's assessment. So let's just work through everybody. Probably the best way to do this is if I shout out names rather than us all trying to talk over each other, and then we can just introduce who we are, the role we're playing today, and kind of where we're from. So I'm Dan Bowden, lead assessor, and I'm head of digital operations at Sport Finance. Okay, James.
Hi everyone, my name's James Shepherd. I'm a lead architect at the Home Office. I'm the tech assessor today.
Thank you. Alan.
Hi, I'm Alan Wright. I'm the delivery manager on Help to Buy.
Fantastic. Theo.
Hi everyone, I am about to join Homes England as a product manager, and I'm here just observing today. Great, welcome. Sanjay.
Hi there, I'm Sanjay. I'm a service designer at Homes England. I've been the service designer for this project and the kind of acting interim product manager as well.
Excellent, thank you. Kaylee.
Hi guys, my name is Kaylee. I'm also a service designer on Help to Buy. I'm working on the other side of the service with Sanjay as well. I'll be the observer today, sorry.
Great, welcome. Helen.
Hi, I'm Helen. I'm the Assistant Director of Transformation Product and Controls in Homes England for the wider transformation, but I'm also acting service owner as an interim basis, just on this particular part of the Help to Buy.
Fantastic, welcome. Adam.
Hello, I'm Adam. I'm a user researcher. I'm on the Help to Buy a managed team, so I'm here as an observer.
Excellent. Joe.
Hi everyone, I'm Jo. I look after user research and performance analytics at the Care Quality Commission, so assessing you are today.
Great. Robert.
Good morning, I'm Rob LeCain. I'm the user researcher on the Help to Buy Apply team. So I will be sharing the user research for this project today.
Great, thank you. Anka.
Morning everyone, my name is Uncle Choroma. I'm the tech lead. Oh, I tried to put my video on. I'm the tech lead on the Help to Buy project.
Great, thank you. Christopher Thomas.
Hi, I'm Chris. I'm the design assessor today, and I'm from GDS.
Awesome, thank you. And then finally, Chris Garman.
Yeah, hi there. I, like Theo, am joining Homes England hopefully next week as a product manager, so I'm just observing today.
Great, welcome, thank you. Alctis, do you want to just talk a little bit about your role?
Oh yeah, sure. So I'm a digital assessor at the Standards and Assurance team at GDS. I oversee the MHCLG account, hence why I'm running the assessment for Homes England. I am in charge of helping the team understand the standard, apply the standard, and go through the assessment process. And I'm facilitating the meeting today as well.
Excellent, thank you. So just a couple of housekeeping points from me. If possible, if people could switch their microphones off and just switch them on when they're speaking, so we kind of cut out any of the background noise. If anyone needs a break or if anyone's got any questions, please stick them in the chat box and then I'll pick them up and address them. I will try and keep us to time and people get quite excited and carried away at these things. So I'll try and keep a bit of a reins on the timing. So if I do cut people short, and I apologise now, but it's just to make sure we get through everything. And I think finally, just to echo the point made earlier, this is very much a peer assessment. Many of us have been on the other side of the assessment panel, so please kind of relax. We want to get the best out of everybody, and it's a great opportunity for you guys to show the great work that you've been doing. So I think that's probably it in terms of intros and kickoff. So over to you guys now for your show and tell.
Great, thanks, thanks everyone. And yeah, just to start by saying thanks for volunteering to be our assessors today. I know how much time and energy it takes to be an assessor, so yeah, thanks for doing that with us today. So I'll be kicking us off with the first bit of the show and tell. I'm going to share my screen, so let me know if you can see it. Maybe somebody, is that all? Yeah.
Yeah, I can see that. Yeah, thanks.
Great. I'm just going to kind of have one of your faces in there. So yeah, so I'm just going to start us off by kind of saying a little bit of context. Actually, me and Helen are going to kind of back and forth between this. So yeah, so I'm the service designer on the project and acting product manager, and Helen's the service owner. So the two of us will kind of start by just telling you a bit about the service before I demo it. So just to start by sort of talking about why this service exists. So we need more homes in England and the UK, but primarily we're mainly talking about England today. Where can I put you so you're not covering? I'll put you up there. So yeah, we need more homes, and we're going to need even more in the future. So the population's growing and doesn't show any signs of slowing really. So we're going to need even more homes in the future. So it's really important that government kind of ensures that more homes are being built in the UK. So more homes are built when people buy homes, yeah. So that's kind of supply and demand. But homes at the moment are not currently affordable. So just a little chart there about kind of what's happening to affordability in terms of earnings to price in the rest of England and in London. It's not currently kind of well, it's very recently stabilizing, but yeah, it's been pretty poor. So yeah, in terms of just a start to kind of like give you a taste of the scale of that. So 2.7 million renters. I think this is in the UK. Yeah, it's in the UK. Want to own their own home, but don't think they could ever afford to. So that's about 6 out of 10, almost 6 out of 10, aspiring to own don't believe that they'll ever be able to afford to. So this is where the service comes in. So I think Helen's going to say a few things about this.
Yeah, okay, so I'm going to just kind of set a bit of the background of what Help to Buy is and talk you through that. So the government announced a group of Help to Buy schemes in 2013, and that was in response to the significant market downturn that we'd experienced. The purpose of the product is to assist people onto the housing ladder, and we're focusing today on a particular part of that journey, which is applying for the equity loan. So the equity loan scheme enables home buyers to borrow a percentage of the home they want to purchase, and this reduces the amount of the deposit that they need. Home buyers can then repay this loan at the current market value, and they come on to sell. And that's kind of when the first charge mortgage has either been repaid or when they move. So they're kind of two of the main triggers that would allow them to repay back the Help to Buy equity loan. I'm going to go into that in a little bit more detail. All owners also pay an interest, and that kicks in at year 6. And the team will explain some of the complexities of that as we go into kind of some of the design user research. Okay, so just that, how does that work in practice? If you purchased a home for 100,000, you'd get an equity loan of 20,000 towards your purchase. More importantly, that is a percentage that is then on your property. So you get the money goes directly to the builder, but the percentage interest equity loan sits on the title deeds of that home. When you come to sell that property, that 20% is then assessed at the new market value. So if you sold your property for 200,000 and it doubled, you would then pay back 40,000 as the result of that doubling. Oh. So how this then works for a member of the public and why does Help to Buy exist? So in the policy principles of Help to Buy equity loan, it's for first-time buyers. Rather than waiting years to save your sizable deposit that you would be required to buy property, certainly new build properties that have quite large loan to values, and that means that you require higher deposits. The Help to Buy scheme allows you to access home ownership quicker. And you can start then benefiting from home ownership, and that means that getting more people into the housing ladder will result in building confidence in that sector as well. What this means is that the component parts of Help to Buy means that you have to have a first charge mortgage and you have to have your own deposit as a member of the public, so you have to have at least 5%, and then your equity loan is up to 20%. In that kind of upturn of where if your property doubled in value, as a homeowner, you are benefiting from the same the same outcomes of being a full homeowner. So although you pay us back in the market value at the time of selling, which has increased, you've also paid down your repayment mortgage. So your lender is a static amount, it's a capital mortgage that you repaying back. And then you also benefit yourself from the increase in that property value, which then goes on to help you then purchase again in the future. So you're benefiting from being on the housing market in the same way you would do in a conventional purchase. So in this example, you can see the amount owing to the mortgage company and the amount due back to the Help to Buy. And although house prices have risen, you know, kind of in even a more modest example of this, you would still benefit from being on home ownership, and that's one of the main policy drivers of Help to Buy. So the service enables more homes to be built. Help to Buy ties into the wider mission of Homes England, and that enables more homes to be built as it increases the ability to buy a home, and that allows developers to bring new sites and new phases forward and build that market confidence. Only new build properties are available for purchasing through the Help to Buy scheme, and they're only eligible to be brought forward. So that also helps towards that outcome and is driving a real kind of interest in buying new build homes and helping the construction industry in that way. Okay, so the service hasn't been built for the internet age, and I think this is a kind of example of where Homes England in its entirety missed the move to digital. Help to Buy was formed quickly. To say it was formed quickly, it was formed in 2 weeks off the back of further equity loan legacy schemes, First Buy 2. And due to those facts, it wasn't built in to have an appropriate service for what we wanted to achieve, and it was built kind of incredibly with complexity around that had been inherited from legacy schemes. So the information that is available currently is scattered. It's scattered around the web in various different views of clarity. Okay, and the information is available on gov.uk. It's available on helptobuy.gov.uk. It's also on various different advice services, those key to provide information on the more general sites. Oh, hello.
Just for me. Sorry.
And then various different advice services. So, and those websites are those providing more of the general information around mortgage processes and builders and lenders. To apply for the product, users must go to helptobuy.gov.uk, and then they need to find one of our 3 agents, all of which have different application processes as well. Again, in practice, so this demonstrates kind of a user would land on the helptobuy.gov.uk website and then be sent to one of 3 websites that all have a similar look and feel, but display the journey slightly differently, and they all have slightly different starting points. The agents are also split geographically, which means that the user has to have an awareness of which geographical agent they need to send their documents to, which then also adds to the confusion and complexity of the current model that we're looking at. The property information form, which is a trigger point for Help to Buy, is the main paper form. Even agents that have started to look at their own online versions all have a requirement to do a part that is paper, and that is either printing and signing and then uploading that and sending that via email. So it's a very kind of paper driven process currently. And because of that, the property information form is the main route into applying. And even where agents have started to look at those online versions, because of those paper aspects that are still required, there has been a step into the mortgage advisors and IFAs taking on part of that role to help almost cajole that paper, getting it into a place and sending it on to the local Help to Buy agents. And that's simply because of the complexity of having to know those geographies, having to be able to know, kind of understand those forms. So they've stepped into this role of almost coordinating that for a buyer at the point of reserving a property. The IFAs are not regulated to do this, and they're not meant to be doing this in the current process either. This causes a breakdown of understanding on various levels for the user, and Rob will talk to that more in the user research element of this. It also prevents kind of users understanding the process that they're going to go through, and also just the obligations on them and of some of the more complex natures of the policies that sits within the Help to Buy equity loan, and the difference between their first charge and their first charge lenders obligations, and then the obligations and how the second charge works with an equity loan, which are substantially different. Some of the feedback is received is due to the complexity of the paper. That's why this role as kind of this hand-holding is required, and we've kept this in mind when we've been designing some of the prototyping work, which Sanjay will talk to.
Just a quick clarification on that as well. IFA stands for Independent Financial Advisor.
Yeah, of course. Yeah, sorry, we're talking a lot of acronyms.
Yeah, and an IFA is basically the same thing as a mortgage broker or a mortgage advisor. And usually when we talk about IFAs, we're talking about mortgage brokers, advisors, or IFAs who are kind of hired by the builders who you're buying your home from. So they're actually not that independent.
Yeah, and that's kind of on this next slide, really. So the builder and advisor's priority to sell, and to just kind of mirror what Sanjay was saying there, that the majority of IFAs are based in the builder's sites office, and that's because they're panels of IFAs that the builder has kind of procured and put together. What that leads to is kind of a gained goal of trying to sell properties and obtain a first charge mortgage for them, because they're paid on commission by the first charge lender. Due to that disjointed guidance that I've already walked through, and the sales process by stakeholders, they're not understanding what comes next within that process. And the quote that's on here kind of explains that, I didn't get the details of how to pay back the loan. I didn't know kind of what the complexities of the product were. So there is concern that some of the less attractive policy aspects of the Help to Buy equity loan scheme are not understood at the point of actually applying for the scheme, which is really fundamental to Homes England's responsibility, and its responsibility of ensuring that people understand what they're signing up to take on as they focus on this scheme. So also with the wet signature that is required, to help mitigate some of the risks, agents have worked around kind of to build their own online forms. However, due to all the current policies and the fact that kind of Homes England did miss that big step to digital, and there are still requirements within to ensure that we have wet signatures on things, and that wider step of transforming Homes England services is starting to tackle some of that. The purchaser also needs to send a copy of the reservation form currently, and a populated direct debit mandate at the point of reservation, all which causes kind of a degree of complexity and focus at the wrong thing at the wrong time, which we've looked at designing out as part of this process. So even though it's a handheld process, and we get a lot of feedback that, kind of IFAs are helping walk people through there, 40% of the applications that are received are still incorrect. And there's discrepancies. Those discrepancies are misfields, they're inaccurate. The property information forms submitted are rejected due to these reasons, and that adds a real delay to the sales process and the actual feeling of a kind of customer experience. And then they're also asked to kind of correct the form and that goes back out to the user, and they've never actually submitted it themselves to begin with. So then the 40% error rate breaks down to kind of fields missing, they're not readable because they're paper and been filled out. And I think the feedback we got from the agency was just it's a lack of due care and attention, and that's actually in the supported process. Names on the builder is also wrong, so there's kind of a whole catalogue of just different paper forms and filling in that is just causing a real breakdown of how this process could work and be far more effective for the user. It's also then, as I've explained, it's delivered by multiple parties using multiple systems. And that means that it's hard to navigate to get to the correct agent. The schemes are all then slightly branded differently and carried out by the agents in slightly different ways. So all the property information forms have a slightly different look and feel depending on which agent they are, and different return addresses on and different kind of structures to them. And then you've also got kind of the details that go into there that are kind of adding more complexity. You've also got, when you're reserving this property, before you even can kind of comprehend that level of complexity, you're also doing your first charge mortgage, you're dealing with your reserve and all of those things that come through. And that whole process is just fairly overwhelming for a first-time buyer. And so this is then a look at our current ecosystem. This slide demonstrates the complexity of the current ecosystem. If we look at the top bit, there's 5 sites that all hold their product information in slightly different ways. When it comes to applying, the process is different than across those regional splits, and all agents have manual degrees of complexity to type into. So the property information form is submitted on paper by email, usually with the kind of wet signature. They then independently type that into their own systems. They then also need to type that into Homes England's system, which is the investment management system, and that's our main investment system, which will eventually result in money being sent to the builder for a kind of accurate completion. And it's quite a static system, and it's one that Homes England has had for a number of years that has been built out as far as we feel it can be. This process is then repeated at every stage. So every time they go to exchange, more paper forms are sent through, but certainly at the applying stage, that paper kind of driving of names, addresses, plots, information is all typed into various different systems.
Great,
Okay,
yeah.
so I'm going to pass over to Sanjay.
Great, thanks, Helen. Yeah, so I guess what you've got there is a good overview of, you know, just how much this whole kind of service, well, it's very, very big and very, very complicated and very, very kind of not built for the internet age. So this is a really, really long-term piece of work to kind of transform this service. I'm just going to be talking about what the scope of what we're dealing with today and what we've been working on in this alpha is. So so this slide just shows you the steps that somebody has to go through, you know, both in the old world and the new world, for right from when a user wants to buy a home, you know, starts to get that inkling that they want to buy a home, that then realize that they can't afford to. Generally, it's because they can't afford a deposit. That's the big thing that kind of people kind of realize that they can't afford to sort of like get a mortgage. Then somebody will kind of go and look at the, you know, some different financial options that are available to them, and at some point we'll find out about the Help to Buy equity loan and find out how much they could borrow. Then they'll need to find an actual home that they can buy on the Help to Buy equity loan. It has to be a home that's registered with a Help to Buy builder. It has to be a new build home. But any home builder who's building a home can register their home on the scheme, can register with the scheme, and their homes get put forward into the scheme. Then a user applies for the loan. Then after they apply, they will go and get their mortgage and they'll buy the home, and then they move in. So that's just kind of like giving you a kind of a high level view of that journey from wanting to buy to actually kind of moving in. Today, we're primarily looking at this step of applying for a loan, but we're also going to be looking at this step that's a bit earlier on in the chain, which is where you find out about the equity loan, and you find out how much you could borrow. And the reason for that is as Helen was saying, lots of people don't understand the equity loan. As you've probably already covered, it's quite a complicated scheme. We haven't even gone into anywhere near the amount of detail that somebody kind of needs to know if they're applying for the loan yet. You kind of need to know quite a lot that we're going to go through in the demo. And you need to know that really before you go and find a home. And that's because before you apply, you need to have reserved the home on the scheme, and that costs up to £500. It's refundable if you get rejected on the application, but it's still a kind of considerable thing. And so you need to have a really good understanding that this is actually a thing for you. So we felt that this kind of finding out stage was really kind of inseparable from applying. And regardless, actually, a lot of the work in terms of like content design work to make the scheme understandable to people is actually kind of the same across the two of them. So we've got these two things that we're looking at here. Oops, just move that out of the way. So we've got these two things that we're looking at here. We're looking at a gov.uk service for applying for a loan, and then we're also looking at guidance that will sit on gov.uk, plus what we've been kind of nicknaming a mini service, which is a kind of little online tool which helps you understand the scheme a little bit better and what it means for you. So I'm going to demo that now so you understand what I mean. Okay, so I'm just going to pop you both there. So this is the guidance page that will sit on gov.uk as kind of mainstream guidance. We've expanded out the guidance that currently sits on gov.uk. At the moment, it's very little information because effectively the journey is relying on that information that people can get from other sources, which we're hoping to kind of reduce so that this becomes the kind of main source of truth for people about this scheme. So at an overview, the equity loan kind of is help from government to buy your first home. Just to say that about the first home bit, it's not currently for first-time buyers, but well, the dates actually just changed, got extended this week, but in the future it will be first time buyers, and there will be property price limits. So those are the two changes that are coming in quite soon, but we're not sure when yet. But anyway, they're quite minor changes to the scheme in terms of the service design. So yeah, this just explains at a high level what an equity loan is. So it allows first-time buyers to borrow a percentage of the property's price to reduce how much deposit you need. The monthly interest payments start 5 years after you buy your home, and then there's a £1 monthly management fee you need to pay as soon as you buy. But your actual equity loan cannot be paid back in monthly instalments. So we're just calling this out really quickly, because that's the biggest, probably I'd say the biggest misconception that people have about the loan as soon as they start kind of looking into it, because for most people their reference point is either a student loan or well, a mortgage, which you can pay back in a monthly installments. But for this, the loan must be repaid in full when you sell the property, pay off your mortgage in full, or reach the end of your mortgage term, whichever soonest. So then when repaying an equity loan, you get your home revalued and repay the percentage of the property's value that you borrowed. And then just about the property that you can buy, it has to be a new build and from a registered Help to Buy house builder. To apply, you need to be a first-time buyer and aged over 18. As I say, at the moment, it's not for first-time buyers, but we're designing for that kind of change that's coming up. Which was due for October. I think it's now been pushed back. I'm not entirely sure yet when it's being pushed back to. Then the Yeah, so this is kind of how it works in a bit more detail, well, quite a bit more detail. So this is kind of helping you kind of understand that breakdown of the percentages. So it's different for London and outside of London. In London, you can borrow up to 40%. Outside of London, you can only borrow up to 20% with an equity loan. So that's the kind of key difference, really. Then there's also kind of what your mortgage and deposit must add up to, but that, yeah, that kind of goes along with the other bit. And then we've given a kind of indicative example of which you've kind of already seen in the slides anyway. And then these are the property price limits, which are coming into effect soon. And then just a bit of text about the ISA, which is that if you do already have the ISA scheme, an ISA open, scheme's closed now, but if you have one, then you can use that as well. But here I'm going to go into this online tool. This is what I was referring to as the mini service earlier. So this is what we've, well, I'll show you. So this would live on a service domain, and it would be, yeah, it's called Check How Much You Could Borrow with a Help to Buy equity loan. And yeah, so it's helping people understand how much they could actually get in their circumstances. So I'm just going to click through this. So firstly, where's the property you're buying? Then how much do you have available for the deposit? So I'm going to say that I've got £20,000 in savings for my deposit. I'm going to say that my annual salary is £40,000, and I'm going to leave that blank, but yeah, just to say it takes into account, well, 50% of your overtime bonuses. And then there's this question about, do you know the mortgage amount you could get? So just to say, users at this point of the journey, you know, when they're kind of researching what are my options, they may have or may not have done some research into kind of what mortgage they could get from a lender. But for us, the reason that matters is because we won't lend to anything more than a mortgage. We won't support, in a way, anything bigger than a mortgage 4.5 times your income. So if I say no, it just works out the maximum that you can get. So your salary 4.5 times. If I say yes, then it will just kind of work it out with the one that I have. And then it tells me here, these are the kind of like important numbers that you need to know basically before you start looking at houses. You need these numbers before you can start looking at houses, really, because particularly this one is your budget. So I'll just talk through them. The first one is the maximum mortgage amount, which is, because I said I didn't know, they've just multiplied my income by 4.5. And then it's just telling you, making sure you're aware that we're not telling you that this is how much mortgage you can get. This is how much mortgage we are willing to lend against. So it's quite an important kind of distinction, but yeah, users are understanding that now with this iteration of what we've been testing. And then yeah, the maximum equity loan amount. So this is the maximum that you can borrow, and because it's the and that takes into account the kind of property price limit and the maximum mortgage amount, etc. And then there's the maximum property price. So this is your home buying budget, basically. So you're going to go and look at homes that are on the scheme that are no more than that. So yeah, currently there's no. So just to say about this kind of part of the service, currently there's no government way to get this figure at all. The only way you'd be able to do this at the moment is by paying a financial advisor, and they'll be kind of doing, yeah, that they won't be doing it exactly like this. So yeah, and then what to do next? So there's a few things. So First, what I'll go into in a second is this links to the rest of the guidance. So might have noticed we're about halfway through the guidance. This continues, this takes you out of the rabbit hole, if you see what I mean, and gets you back to where you were in that sequence of guidance pages. This other thing is about talking to a mortgage lender. So again, you know, we've told you what the maximum mortgage amount we'll lend against is, but we haven't told you how much mortgage you could get. You'll need to speak to a mortgage lender for that, and independent financial advisors can help you with it. And then, yeah, of course, search for a new build home. So you can do this at this stage. And just to show you, so this links to the regional Help to Buy agents websites, which, well, this is the page to find your local Help to Buy agent, of which there are 3. And just to say, in the future, we're hoping to kind of, well, look at this whole area, because, you know, it's not great for lots of reasons. But at the moment, we're going to be in this kind of future state that we're proposing. We need them to, we're not going to be touching them, basically, because people can find the homes that they actually want to buy on these websites. So you click through to here, and you actually will then, like, probably clicked the wrong one that I'm used to. You actually like find a home in that location, but you can also find them on your kind of normal kind of commercial Foxtons, etc., Zoopla, those sorts of websites. Okay, so let's go back to let's kind of jump out of this rabbit hole and go back to the rest of the guidance. So this takes you onto this next page, what you need to pay. So this is quite a complicated thing to get your head around. There are 3 types of payment you need to make. So first one's easy. It's just every month we charge you £1. Yep. Then there's the monthly interest fee. So this is quite complicated. So interest payments start after 5 years at 1.75%, and then increases each year by a fixed formula which uses a measure of inflation called the Consumer Price Index plus housing. So the formula is the previous year's interest multiplied by CPIH plus 2%. So yeah, it's quite complicated. Most people do then click this to actually look at the illustration. So we've illustrated kind of like what it could look like based on an equity loan of 60,000, which is pretty much average of how much kind of people borrow. But then, of course, inflation, very hard to predict. So especially at the moment, it will probably be much lower than this, actually, considering we're moving into a recession now. Actually, it'd probably be a bit less than this, but we wouldn't want to kind of show figures that are less than it's likely to be in this illustration. But yeah, we've got it hidden there just so that people kind of really make sure they read that bit first, and then usually what people kind of go is, okay, I'm not sure I get that, but at least they can get it, if you see what I mean. Like they don't sort of want to get it. that's a really bad way of explaining it. They look at that and they go, okay, I understand that it works like that, but I know that I won't be able to kind of work that out and project because it takes into account inflation. Okay, so moving into paying off the equity loan, which is separate. So those monthly, again, just saying those monthly payments don't go towards repaying the equity loan, and you've got to repay it in full when you sell your home or pay off your mortgage. The amount you repay will depend on the RICS evaluation of your home, and you'll need to have your home valued each time you make a repayment. So that's why you can only kind of pay it off in lump sums. So these really big lump sums of 10% or 20% or 30% of your whole kind of property value. And then there's also £200 admin fee each time you apply to repay. yeah, and then we've got again a kind of illustration of what that would actually look like if the market value of your home rises or if it falls. So if it rises, you're going to be paying more. If it falls, you're going to be paying less. And just to say as well, so there's another team working kind of like in parallel to us. We'll be talking about this a bit more later. But Kaylee, who's observing at the moment, is the service designer on what we're calling the manage and pay team, which is kind of looking at the other half of this whole kind of project. So managing your loan and paying it off. Okay, so few restrictions that people often don't wouldn't assume is true. Biggest thing is that you can't own a second home. It's got to be the only home that you own, and you've got to pay back if you're going to buy another property. If you can't rent out your home, you've got to live in it. You can rent out a room as long as you carry on living in it. And then structural alterations. So, you know, if you want to build an extension or something like that, then that will almost certainly increase the value in your property. So what some people kind of wrongly assume is that, well, because I've paid for that extension, you know, the value increase is all for me, right? But actually, no, the value increase will still increase the amount that you owe, unless you have a medical or accessibility need to make structural changes. So like if you need to build a ramp or a stair lift or something like that, then you can get that resulting value increase excluded from how much you need to repay. But you need to get written permission to do that. So this page is just really kind of trying to really clearly make sure people know the biggest things that might mean that actually this scheme is not for them. Because if any of these kind of make you go, oh no, I definitely don't want that. You know, like for example, if you actually don't want to live in the home that you're trying to buy, then you need to know really early on. And at the moment, we don't have a clear way of kind of telling them that to people. Okay, so here's the process for applying. So we've kind of gone through this, but here it is in the guidance. So yeah, first you need to kind of go away and get a realistic idea of your mortgage amount. You need to find and reserve a home, and you need to also get hold of a conveyancing solicitor as well. Actually, this bit and this bit, well, and sort of this bit in a way, at least finding a home, these are all kind of just, you know, things that you're gonna have to do if you're buying a home. The key thing really is the fact that you're doing all this before you're actually applying for the loan. So I'm just making sure that people really understand that. And then again, just making sure people really understand you don't do this stuff until after you've applied for the loan, particularly apply for your mortgage. And we're trying to make sure people are doing that because there can be costs incurred with applying for a mortgage. So you should know by the time you go to apply for your mortgage whether or not you've got your equity loan approved. And then that's just saying as well that your reservation fee will be refunded, and also, yeah, just about what I've just said about the mortgage. And yeah, and so just to say as well about this so this is effectively our start page for our apply journey. It's not a kind of normal kind of service start page. It's embedded in guidance, and that's because we don't want people. We did actually start with a more kind of I guess you might call it a more traditional GOV.UK start page, and the reason why we moved away from that is because we don't want people to be coming along and just kind of, well, jumping to step 4 basically and applying without kind of understanding the rest of the process and understanding the rest of the scheme. So we want people really to be kind of like hitting this page first and looking at the rest of it. But of course, if I'll just kind of like sort of set us back into a scenario. So far we've just been a kind of person who's looking at my options, kind of researching an equity loan. We're now going to kind of fast forward in time to somebody who's reserved a home. So in our user research sessions, we've been using this kind of mock-up of a letter from a builder to try and fast forward in time with people. And so we've been saying, okay, so you've understood the scheme now, you've gone away, you've found a home, you've reserved it, and then you've been given this letter by your home builder, which is effectively a receipt for your £500. And then that's going to send you to this URL. This URL doesn't exist yet, but this is the URL we would want to be linking to this page. And then from here, they would then start to apply. Okay, shall I stop? Shall I just pause there for a second for questions if there's any questions about the guidance, because we're now going to go through the apply bit.
Oh, good, Sanjay. Just carry on. Okay, great. Cool. Okay, so we're starting off with a few before you start questions. So these are basically kind of checking that you're in the right place of the journey in terms of like that you've read the guidance and you've done the right things. So these are kind of like checking that you've read those restrictions that I've mentioned before. And this is kind of, yeah, checking that you've reserved the home and then asking you when as well, because we need to know that. So this is checking again, you've got the right information to actually proceed with the rest of the form. And then this is checking that you meet the kind of eligibility criteria, I suppose. So here we've got the bit where we've put this bit in as a sort of holder in a way for proving your identity. We've been testing with these kind of like few mock-ups of GOV.UK Verify, because we're expecting whatever we will use, so we won't be able to use, so just to make sure everyone knows, we won't be able to use GOV.UK Verify anymore because they're not onboarding any more services. We were really looking forward to using Verify because it would have met our needs really well, but we won't be able to do that. But actually investigating into kind of like what our identity needs are, our fraud risk is actually quite low because identity proofing is happening at other parts in the journey, and actually it's quite difficult to kind of like con this service out of money, basically, because you're getting an equity loan, and the money doesn't go directly to you, it goes to the builder. So you'd have to have a lot of people kind of working in cahoots with each other. You'd need the buyer, the builder, and the solicitor all working together to basically con this service out of money. So part of the reason we wanted to use Verify was to kind of just further reduce that risk, but also to act as a kind of login for later on. So we are currently in the position that we don't really know what we're going to be using for sure on identity, but what we are doing is we're working really closely with Land Registry to make sure that whatever they go with for their Sign Your Mortgage Deed service, in terms of identity verification, we're probably going to be using the same thing, almost certainly, so that users don't have to kind of prove their identity to government in two different ways. So yeah, so we're just keeping a really keen eye on this kind of space at the moment, but at the moment we don't think it's a big risk to our private beta. Okay, so now into the kind of application form proper. So I'm going to proceed as if I'm buying with one other person. That just adds a couple more questions onto the application form, but also just to say, most people are doing this. Most people, I think it's 60 or somewhere around 60 or 70%. I think it's more than 70% actually of people are buying with one other person. And that's pretty much the same for whether or not you're buying with an equity loan or not. So yeah, so this is one of the extra questions that are in there if you're buying with another person.
just checking the conditions, that they meet the conditions. Then you're entering your contact details. I'm going to whiz through this quite fast because yeah, it's a pretty standard application form for most parts. So yeah, then you're putting in your second applicant's details. You need to put in when you expect to complete buying your home. And then you need to tell us is your home still being built. I'm going to say yes, just because it adds a couple more questions that will show you. So this is one of them. So when do you expect your home to be built? You need to know that. We need you to tell us the home builder details, and this is all on the on that receipt. So you kind of find out the organisation code from there. Then there's the details about your new build home. So if it's still being built, it might not have an address, so you'd have a kind of like plot number. Again, that would be on the letter. And then details about your new build home, your new home, sorry. And then there's your income details that you'll need to tell us. And your outgoings. And your partner, so this is your partner's name, their income details and their outgoings. And then you need to tell us the property price and the equity loan percentage you're applying for. So just an interesting point on this is that almost everyone, like 99 point something percent of people apply for the maximum that they can. So 40 in London, 20 everywhere else. That's partially just because we don't really make it kind of clear in any way that you can apply for less. Partially it's just kind of like that sort of rule gets bungled in with so much other kind of complicated guidance. But we felt like this was a good point to kind of really just kind of give that decision to people again, like, okay, so you're applying for it now, like, is this actually the equity loan percentage that you wanted? Do you want something a bit lower? And we've kind of shown people what that means as well to help them make that decision, without kind of nudging people to definitely borrow less, but saying, you know, you can. And one kind of sort of advantage to us if they do borrow less is that we can then lend to more people, because there's yeah, only so much money to go around. So this is about the amounts that you're going to pay. So you put in your joint deposit, and then you put in your mortgage amount as well, so that we know that. And then this is kind of checking what you're borrowing. So this is just kind of confirming you're borrowing 20% of the value of your new home, and the home builder is going to receive this amount. And then we're going to explain to you how that works in terms of repaying. So if somebody's read the guidance, none of this will be news to them, but we're restating it here in case they haven't, basically. So they really know the loan that they're getting into, basically. So yeah, you've seen all of this stuff in the guidance. It's the stuff around the management fee. It's the stuff around the way that the interest works. What we've done is what we're planning to do is make this sort of guidance more dynamic with the kind of actual figure that somebody has entered. So it gives you a bit more of a kind of like realistic idea of like, you know, how much you're going to be paying in interest. But again, we don't, you know, we're just projecting based on inflation, a kind of made up figure of inflation. And then, yeah, I understand and then people need to check a box to say they understand that. And then we have about repaying on a separate page. So repaying in part, those big lump sums, or repaying in full, making sure you understand when your loan needs to be paid by and how much you're going to pay if it rises by 5% or falls by 5%. And of course, it could be much more or much less. And then checking that you're understanding those key things as well. Okay, we're out of the forest now a little bit. So now we can provide information about the household, people who are going to be living there, including adults who will live there. And then, yeah, some more details about that adult who is living there. Then we've got details about the conveyancing solicitor, so because that's needed to talk to them about the whole process, and the mortgage advisor if you've got one. And then there's this check your answers page. So it's quite a long form, so there's quite a lot to check through, but people don't seem to have any issue kind of looking through this. And then, yeah, just declaring that that all of this is correct and true. So this is copying a HMRC pattern, I think. Okay, so if you are buying with another person, this is where, well, I guess from a service design perspective, it gets slightly more complicated because both applicants need to have seen all of the information that is being submitted. So all of each other's incomings and outgoings, as well as, of course, you know, how much they're borrowing and everything. So, so the way that we've what we've designed to kind of get people through this is another bit of the form that will be used by the partner. So I'll show you how this works. So the first applicant will need to kind of copy this code and give it to the second applicant. And then they'll receive an email and use this code to access the application. So other than that, yeah, the form's been submitted, but the second applicant needs to do their bit. So I'll just show you quickly. This is the very last bit of the, what I'll be showing is the, what the second applicant will see. So they'll see this email that we'll be sending with Notify to about what's happened so far. So your partner's applied, but you need to do your bit. We're also linking to the guidance again to make sure that that second applicant, you know, has access to that, can read it, and then they're going to go into their bit. So they'll put in their submission reference. They'll check that they understand everything, as with the first applicant, or we'll check that they understand, sorry. And then they will prove their identity. Then they'll need to check the information the first applicant has entered about you. So they're checking that it's all correct. And so just to say, because you might be wondering why the first applicant has entered the information and why the second applicant isn't just entering the information about themselves. So the reason is because both applicants need to see the information about each other. So this is the quickest way to do it so that there's the least back and forth between people. If you see what I mean. So, yeah, so this is the quickest way to do it. So the first applicant's checking the information. Actually, in practice, when we talk to people, most people said we'd probably just be sat together doing it anyway. So the first applicant would actually be able to just make sure that the information is correct the first time. But this is just checking it through in a position where we know that it's definitely them basically doing it. So then, yeah, we've kind of added this bit in a way to the check your answers pattern, just because it's a slightly kind of, well, just to make sure that they are actually checking that the details are correct. And then they're checking the first applicant's information about them as well. Then they're checking the property and purchase information. So the home they're buying, what they're borrowing, etc. And then they're checking all of these same pages as the first applicant about what they're going to need to pay back. So, well, what they're going to need to pay in terms of interest and what they're going to need to pay back in terms of, or pay off the loan. This page is just hard coded in there as if I've changed one of the things, just to tell that second applicant that the first applicant needs to confirm that change that you've made. So if there are changes, there will be a bit of a back and forth. And then they need to declare that all of that's true. And that's it. So that's the whole of the apply journey. And now I'm going to hand, actually, I'll just say actually one point about that, just in comparison to the as is process, or a couple of points. So firstly, yeah, it's not going to require a wet signature. It's not going to require a reservation form to be attached, and it's not going to require a direct debit form to be completed at this point. And that will kind of be moved later on. So those are kind of three kind of big benefits to the user, other than the fact that it's, you know, now an accessible form that actually helps them understand what they're applying for. And yeah, so we're hoping, well, we're projecting that this is going to massively reduce that kind of rejection rate that we see, kind of just very quickly. Basically, like fields with missing information, we're not going to have that, because we'll be able to catch that with the digital form. We're not going to have the not readable issue, because it's all going to be typed. We're not going to be having the supporting documents missing issue, because we're not asking for them, and the math's not adding up. Of course, we're going to be able to do that with error validation. So yeah, over to Rob now to talk about users and what they need.
Sorry, Sanjay, thank you very much for that. Just to check, are there any questions at this point following the demo and show and tell?
Can I kick off with a couple? Sanjay, Helen, I mean, firstly, thanks ever so much. That was incredibly interesting and very, very useful. So just a couple of questions from me. In terms of the wet signature bit, does that involve changing kind of legislation, and do you kind of foresee any issues with that?
Helen, do you want to take that?
Yeah, sure. So no, what it's involved is a slightly different approach from our Chief Legal Counsel. So these forms are Homes England's forms. We're not at this point looking at the equity mortgage in itself, which has a wet signature, and that's work that will come into this at a later stage. But it's been very much just an assumption of, to ensure that this person is doing something on a paper form, we need a wet signature. That was the kind of driver behind looking at something like Verify, that the need for a wet signature is because of the hand-holding of third parties to make sure that this was really signed and the person was there and have been aware of that form, because we have such an issue with them being emailed through by third parties. Removing that and putting it into a digital landscape with some form of verification through it removes the need for us to have that requirement, and therefore our internal legal team are happy with that.
Okay, great. So it's kind of within your gift to solve that.
It is certainly at this stage, yes.
Okay, yeah, that's really helpful. And then secondly, so you kind of talked about the end-to-end journey from a user perspective, and you're chunking it up, and that's a great approach to take, kind of bite-sized bits. But how are you planning to make sure that you don't end up having disparate bits of the same user journey? Is there kind of a overall governance that are bringing these component parts together?
Yeah, so we'll be talking about that quite a bit more later on, but I guess just to say at this stage, most of our team are kind of hiding by kind of the transformation directorate, but we're very much embedded into the Help to Buy directorate, which is kind of looking at everything that is going on in Help to Buy. And then, yeah, we've got at the moment, the only other team that's kind of like working on new stuff is the Manage and Pay team. We're very, very much joined up with them. We actually started with them. Actually, Rob's just about to mention the Discovery was kind of one team, and then from there we stayed synced up in terms of the way that we worked with sprint reviews and show and tells, etc. So yeah, we're really close with that team. And then as the teams start kind of what's the word, kind of increasing in number, that join up will continue as well. But yeah, Alan and Helen are both going to cover that quite a bit later on in the team section, I believe.
Okay,
yeah, I think that kind of concept to do a wide discovery end-to-end allowed the teams, when we were focusing certainly on just apply, to be confident that we could remove things out, and also know the complexities and issues that having certain things at apply stages were causing, the direct debit mandate being one of those, that actually having it at the stage that we have it now through discovery unearths that they actually lapse in time, they're valid for 6 months. So all of those things of doing that broad discovery and then honing in has been really helpful, that we do have that understanding of this end-to-end now.
That's right, yeah.
Yeah, also we have like multiple product teams sitting within like the service team, which is Help to Buy, which kind of sits under, you know, the sort of whole kind of transformation governance, of which there's you know, sort of 5+ services, you know, as well as kind of communities of practice for you know, people to work horizontally across the disciplines. So that's how generally we're spotting opportunities to not step on each other's toes and to point in the right direction.
Fantastic. No, that's really helpful. Thank you. And then finally, my last question. So we've kind of seen the front bit of the service, but just thinking of it kind of from back to front to back, where does all of the information go when it's submitted? Does it go into a back office case management tool, or what then kind of happens to it?
Yeah, that's a really good question. So I'll just clarify that. So you know how we've mentioned these 3 regional agents that users currently have to apply through. In a way, technically, they're still applying through that agent, i.e. the application is still going to be going to those regional agents. There is a plan, or at least a kind of a movement towards reducing those number of agents down to 1, so that 1 agent is dealing with it all, so that it then becomes a bit more like we just have somebody who deals with the Help to Buy applications. But yeah, currently it works. I mean, I kind of think of it a little bit like the Register to Vote scheme service, if you know how that works, where your application is basically going to a local authority. It's a little bit like that, where it's going off to those 3 different Help to Buy agents. But effectively what they're getting from us with this new service is exactly what they get with the current service, but they'll get less errors. So that's the difference between the current state and the new state.
That's a bit of a simplification there, but we'll get into more detail on this in the tech slides later on.
Yeah.
Okay, great. Thank you for that. Any other questions from the assessment panel at all?
No, I'll wait and see if mine are covered next rather than jump the gun.